Hey, how's it going? Hope everyone's doing fine. In today's video, we'll be talking about investing in the US and with what's happening on a global level, why this might be the right time for you to start your foreign investment journey and the benefits it might have for you in the long term. The US government's support during the pandemic, the lockdowns in China due to COVID, and the Ukraine-Russian war, all these three have combined to take US inflation to a high level that was last seen in 1981, and that combined with the negative economic growth that US witnessed in the first quarter of 2022 have given rise to something that is known as stagflation. So stagflation in an economic scenario happens when there is a combination of inflation and negative economic growth, and that's exactly what's happening in US now. And when such a thing happens, it becomes very tricky for the central government to manage, because a central government of any country can either manage inflation or manage economic growth. They cannot take care of both at the same time, because the measures that take care of inflation negatively impacts economic growth and vice versa. So it becomes very tricky to manage situations such as stagflation. Now there are much more nitty-gritties about this, but considering the overall scenario, many are predicting that US can go into a recession. Now obviously no one knows that for sure, but what we do know and what we are seeing is a drop in the US stock market. So if I talk about S&P 500, which can be said to be a representative of the US stock market since it houses the largest 500 companies out of US, S&P 500 has observed a drop of 25% over the past 6 months. And if I talk specifically about the high growth tech companies, these are the ones which have particularly taken a beating. So in the last 6 months, Apple has dropped by 22%, Meta, that is the company which owns Facebook, Instagram, WhatsApp, has dropped by 52%, Microsoft by 22%, Netflix by 69%, Alphabet by 21%, and Amazon by 32%. Now, overall this looks like a gloomy situation, but it is circumstances like these which help to boost the overall return of your portfolio. Because from what we have learned in the past, if you're able to enter when everyone is panicking and when the market is down or when the prices are down, you are reducing your cost of purchase. And during these times, if you are able to invest in a diversified manner in good quality companies, you are set for the next 10 to 15 years. And hence, because of this reason precisely, this might be the right time for you to start your investment journey in the US. If you are unsure about which particular US company to invest in, that's fine. You can invest in something that is known as ETFs or exchange traded funds. These are funds which are listed in the stock market index, and they try to replicate the return that is generated by a particular index. So let me give you an example. Let's say you want to invest in S&P 500, that is, you want the return of your investments to be similar to what the S&P 500 would be generating in the next couple of years. So there is an exchange traded fund that is called SPDR Portfolio S&P 500 Value ETF. Now, if you invest in this particular ETF, you would be investing in a wide variety of companies that tracks the performance of the S&P 500. So basically you would be betting on the US economy by investing in this particular ETF, which very closely follows the S&P 500. Now, there are also ETFs which tracks a particular sector instead of the entire economy. Here are a few examples of ETFs which invest in the S&P 500 and the tech sector. You can pause the video and take a look. Now, how do you invest in this particular US-based ETFs? The app which I personally use to invest in US is IndMoney, and hence I'll be suggesting that only. So if I go to the IndMoney app and I search for ETF, so let's search for SPY SPY. So all the ETFs have this keyword kind of thing which you can search with. So it's easier to search because they have huge names. So this particular ETF tracks the S&P 500. Once you open it, you can go below here and you can swipe all the way below. And then you can see it's mentioned that this ETF tracks S&P 500, and the S&P 500 index tracks the performance of 500 large companies. So this particular ETF tracks S&P 500, and if you go up here, you can see all the companies it has invested, the top 10 holdings. You have Apple, Microsoft, Amazon. You have the bifurcation here by market cap. So mega cap is 49%. Sector, it has 26.72% invested in the tech sector, then healthcare. When you go to assets, you can see the breakup between equity and cash. Cash, it's just 0.25%, rest is equity. Here below you can see the region-wise breakup, that's the company they have invested in. So you can check all the details here when you search for a particular ETF in the IndMoney app. Now I have already made a detailed video regarding how the investment in US works, and how you can exactly do that using the Int Money app step by step. So I'll link that in the description below or somewhere around here, and you can go ahead and watch that. The process is pretty much the same if you want to purchase any particular exchange traded fund. Now, one thing I would suggest is that you start investing in any of the ETFs using the SIP mode that Int Money has introduced. So if I go to that ETF again, and below you can see there's buy, there's SIP. If I click on SIP, the SIP frequency is monthly, or you can also invest on a weekly basis. And if I click on how SIP works, you can see they have explained as to how the SIP works from choosing a date till the time when your order will get placed. Now, this is something which I recommend because no one knows exactly where the market is headed. There could be a recession, there could not be a recession, no one exactly knows for sure. So when you're investing through SIPs, whether that's on a monthly basis or a weekly basis, you are making sure that you're invested in the market at all times, no matter what the market scenario is. Now, I personally am invested in this ETF known as QQQ. Now, the reason I'm invested in this particular ETF is the companies this ETF is invested as of now, I am aware about these companies. I've been using the products of these companies for many years now, and these companies have tested business models. And most importantly, I have a positive outlook, or I believe that these companies, or the US tech sector in particular, will continue to remain relevant for the next 10 to 15 years. Because no matter what anyone says, it all boils down to what your future outlook is. If you really believe that US, the world's largest economy, which houses some of the world's largest companies, will continue to grow for the next 10 to 15 years, now might be a really good time for you to enter that market. Until the next one, take care, see you, and bye-bye.